Let's take the discussion forward and welcome on board Mr. Rajesh Kothari, the CIO at AlfAccurate Advisors, joining us on the show. Rajesh, hi, good to have you on ET. Now, let's begin by discussing the building material and cement space itself, because that's seeing quite a bit of traction. Would you be a buyer in in this sector in any of these names?
Well, yes, we remain positive on cement sector, not only cement sector, overall on the building material space as well. The few things which are important is one is, of course, the demand is reasonably good. And second is, importantly, the cost curve is coming down, particularly for the cement sector, which definitely adds to their margins. When it comes to building material, I think they get the tailwind from the industrial capex. They also get tailwind from the government capex. They also get tailwind more from the real estate boom. So there are multiple tailwinds which helps the building material segment, whether it is a wires, whether it is cables, whether it is a PVC pipes. So that's basically the space on which we are reasonably positive. We continue to own this space from almost, I would say, last 3 years, and we remain constructive even at the current levels.
Stocks which have been holding out, and in fact, talking about Shree Cement, there was a Nomura upgrade as well to now a buy from the earlier reduce. They've hiked their target price also to 28,700 from the earlier 20,400. And of course, they say that the upgrade is owing to the cost optimization, stronger capacity growth, change in management, and that the balance sheet is going to remain strong despite the elevated capex plan that they have. That's Shree Cement, one of the top cement movers in trade today. Rajesh, similar can be said about the metals pack as well, right? Holding very, very smartly in trade. What do you think is aiding the move, and would you have any preferences within the metals pack?
Normally, we do not take any exposure to the metal sector because in this sector, the volatility, of course, is extremely high. Not only volatility, the geopolitical reasons and the tariffs, change in policy on tariffs also significantly changes the earnings estimates, and because of the prices and the currency moves. So we avoid taking any exposure to metal. So we do not have any view on the sector.
So you avoid the metals pack usually, but I remember, Rajesh, you were earlier quite positive on the NBFC space, right? With the advent of Jio Financial Services, does that thesis change at all?
No, not much. I think the size of opportunity is huge, and unorganized sector is still very large. The penetration is still remain very low. So I'm not too much worried about Jio making dent into the current NBFC space, which are the listed plays, because the opportunities are really large. But I think more importantly, the pickup in the credit growth, which is an important factor, and the credit cost, which is also remains low, that is also an important factor. If you look at the recent quarter numbers, most NBFC, not only NBFC, even the banks, they both have reported reasonably good numbers. And incrementally, the pressure on net interest margins, which you might see on the banking space, that may not happen on the NBFC space because they are going to be now benefit as and when the interest rate comes down. Now, I'm sure, it's still 1-2 quarters away, but after 2 months, after 3 months, after 4 months, as the inflation worries comes down, the interest rate also, they need to reduce. And as that happens, the NBFC will be the bigger beneficiary compared to the banking space within banking and finance segment.
Okay, the other space which is interestingly seeing a bounce today has been the IT pack, and we were just addressing this with our chartists as well. But Rajesh, do you believe that the worst could be behind IT, and at least, one can be a contra buyer here?
I think you need to be really very, very selective when it comes to IT names. So of course we own few names, but on a sectoral basis, if you ask me, we are still underweight on the IT as a sector. I think we see a lot of opportunity on the domestic themes. Be it building material, be it the space in banking and finance, be it space in automobile and auto ancillary, be it space in capital goods. I think there are a lot of things which are happening on the domestic side, which makes more bullish on the domestic theme compared to the themes which are linked to the global economy. Please remember, the world is still grappling with the question of whether we are into recession or whether we are into stagflation. And in such kind of an environment, one needs to be really bottom up when it comes to the sectors like IT. That's basically our view on the IT sector.
Discuss some of the names, Rajesh. How are you being selective in the IT space? Are you looking at large caps? Is it the niche ER&D segment that you're looking at? Any names?
Well, I think it's a combination of all things, be it a large cap or be it a mid cap or be it a small cap. But clearly, as I'm saying, the challenge here is how basically the companies make sure that they move their portfolio, their current product profile, the suits from the legacy to the more related to cloud in last 2 years, and incrementally from cloud to the AI related portfolio over next 3 to 5 years. And therefore, as I say, unfortunately, I will not be able to talk about the names, but a selective strategy would be the better strategy in this space.
Great to have you on the show today, Rajesh. We let you go on that note.